Ketaki Sharma is joining us right now to help us do exactly that from Dubai. Ketaki, good afternoon and thanks so much for joining us. We deliberately
Hi,
planned
Ajay.
this chat today because we would have a lot to chat about. And last evening, US Fed, Mr. Powell seemed to have actually given everybody, the skeptics, ample ammunition. People who thought, will there be a pause? Yes, it appears to be a big pause. How are you analyzing the commentary last evening?
Hi, Ajay. Thanks so much. Yes, it has been as per markets. So largely markets were expecting a 25 big hike, and that has come into play. And the markets were also expecting that, from there on, there'll be a big pause. But bear in mind the fact that Powell has mentioned categorically that there will be no cuts at the moment because his concern, and he highlighted that sufficient number of times, was that inflation is still at higher levels than what they are comfortable with. So the inflation story is basically a global story, not just an India story this time round. And we will be closely watching this.
Sure. Okay, also in light of the way bond yields are actually falling across the world, Indian bond yield today are at almost 1 year low, US bond yields 1.5 year low. What exactly are the money markets factoring in terms of growth, in terms of shape of the economy near term? Why are they collapsing?
So there are a couple of reasons. So there are these there's a banking sector overhang, right? So we know what's happened with SVB in the recent past and some other banks in the US, and those are giving people concern, giving markets concerns, and that's something that has kind of led to sort of that pause on rate hikes that we are seeing now. Now, whenever something like this happens, there's the banks tend to respond in two ways. So, firstly, it will obviously tighten lending norms. So we will see smaller, slower credit offtake happening, and that tends to impact the small and medium enterprises disproportionately. So we would feel that pain. The small and medium enterprises would feel that pain even more. And secondly, the banks tend to do something that is an equivalent of banking sector saving. So basically, they are preparing for tougher times ahead. They are preparing for times when there could be a liquidity crunch. So in the near term, we are likely to see an increase in liquidity in certain sense because you would be seeing banks saving more and thus preparing themselves for something like a crisis.
Okay, Ketki, I'm also curious to understand, if you're a practicing economist, so from an economist's eye, when do you really see rate cuts to start to happen? Because, there's one more interpretation of yesterday's commentary from the financial market point of view that people thought rate cuts could actually happen this year itself, towards the end. And when, the commentary seemed to have suggested that it is a long pause, not a start of a rate cut, market may have gotten a bit disappointed. How did you interpret? Are you saying that the possibility of rate cuts by Fed has been delayed to the next year?
Sure, Ajay. I think that's a very good question and really relevant at this point. Now, what has happened in the recent past is that data has tended to be really unpredictable, and that's partially to do with how we've been collecting data and how the new age digital economy gets factored into, say, the various macro numbers, GDP, and so on and so forth. So what we are seeing now, that we are witnessing something like a very unpredictable world. So for instance, what we were expecting in February in terms of China opening and how that would give a thrust to commodity prices is probably not going to play out. So we are living in a very volatile world. Things are changing really quick, and rightly and central bankers rightly so have decided to be more data driven, more reactive rather than proactive in their policy approach. So I think there is a very data dependent policy response that is going to happen. Having said so, we think that we do not rule out a year end rate cut at the moment. So from what we see now, there is a possibility that the rate cut could happen, a small rate cut could happen towards the end of the year.
How are you reading India in terms of the trajectory? Because there's a sense that actually India has taken the first step towards a pause. We had paused in the last time as well. The cut also, we had started the cuts, right? What are your thoughts on the way rates could head in India next 6 to 8 months?
So, in India's case, inflation has historically been a big issue, right? So that's been our greatest con. Let's say that's been our greatest con so far. And inflation has always tended to be sticky at around 6%, 5.5%, 6%. I do not foresee that to change dramatically. I think it will. So the RBI's rate cut. So the RBI wants it to be at about 4%, and that might be hard to achieve. Also, in the backdrop of say, how food prices are going, right? So if you look at how sugar prices have risen in the recent past, how cereal prices have risen, so all those things impact household disposable income, also household sentiment. So also at this stage, it'll be very data dependent also how the weather conditions play out. So I think the monsoon season would be something that we would watch out very closely to understand how the rate cycle would advance from here.
One last, kind of a bonanza which is happening for India, which is several times very underappreciated, is the way global crude oil prices have actually collapsed. They may be on expectations that growth may somber down, global growth, and this engineers slowed down by the Fed. But actually, it's turning out to be a huge bonanza for us, $73 Brent. In the next coming months, in the run up to the elections, do you see the policymakers use this bonanza for public spending, big capex, all of that? Do you see that happen? Because we are saving a lot of money because of crude coming down, isn't it?
True, you're right, Ajay. You're absolutely correct. And especially, in the run up to the elections, we think that's a real big positive happening. So that, of course, government spending is going to bolster economic growth. And crude coming off, if it's passed on to the consumers, is obviously going to be a huge plus. But our current account deficit is driven by two things. It's driven by crude, and it's also driven by gold. So gold prices haven't been coming off. They have in fact been on the higher side, and that's not been very supportive. So we have both factors. Of course, how the crude prices are going to be passed on to the consumers, that's going to be playing a big role. But also how government spending would be supporting GDP, that is going to be a huge positive, like you rightly pointed out.
Right. All right, Ketki, we'll let you go on that one. Thanks so much for joining us today.